right, Pete, let's talk about the week ahead. Are we chasing inflation ghosts or not?
I think in some ways we are. You know, those ghosts, are they really there, Will? You know, as far as the Fed's concerned, I think it's going to be a 2024 picture as far as raising rates. And if we get inflation, it just seems to be bubbling along at that fairly subdued numbers. The Fed's looking at closer this week, but I think the long-term forecast is going to be very much under control and certainly under that 2% number over the next couple of years.
All right, let's frame up this week ahead. We've got three major central bank meetings. We've got an election in Japan. We've got a new leader coming in over there. We've got an overload of key economic data. I mean, there's going to be a big decision at the Fed.
Absolutely, and you're talking, I think it's Wednesday as far as decision day. But is it just a PR exercise? And I just think possibly we are leading up into that election. Biden's in front of the numbers. It could be just a wait and see process. You're about 50 days out. There just still doesn't seem to be we don't get a lot of news here. I don't see Biden on TV much. So is the Fed just going to, kick the can down the road figuratively? And let's see, we've got inflation under control. It just seems to be very much a work in progress.
Take a look at this chart. We've got the Fed outprinting by the ECB by a mile.
That was the real indicator as far as that US dollar weakness over the last, say, 5 months. The firepower that the Fed has thrown at this is nothing short of extraordinary. We've discussed in previous weeks the double firepower that was thrown at this compared to the Lehman crisis of 2009. GFC, and we haven't seen numbers like this really at the magnitude since the end of World War II. So it's just very, very dynamic. The percentage changes are just off the charts, and it'll be interesting to see whether that US dollar continues its downward falls.
All right, Pete, so let's look at the yen. So it's preparing for some turbulence over there. We're talking a bit about the election that's gone down, the results through. What's the data point?
Well, we're saying that Mr. Suga, that'll be announced sometime today. It wouldn't be surprising that Chief Secretary does get the role to take over from Abe. And what'll be interesting, will he call a snap election, considering there's only about less than a year left of this particular term? So if he does call that, he'd have strong support from his party. Abe's been a huge hero domestically, and he would keep those, I think, works moving along. The Abenomics, that mindset, it's been a success story. So that could well be the case. And I think that it's not a bad trade. It's been very interesting, the yen versus US dollar over the last matter of months, and that intrigue could stay with us.
Tracking very closely here as we look at this graph, you're suggesting really we'll probably maintain that correlation.
Well, I think so. I'm sure that 106, 107 sort of number is achievable. Let's just see if Suga does get the role. If Mr. Suga is successful, then there could be further upside there for that Japanese yen. It's just very much a wait and see.
Well, let's take a look at England. The UK economy, is it on the mend to some extent? But look, significant work to do.
Absolutely. You're looking at that PMI. It's now around about that 3.5 to 4 sort of number. You can't believe that this Brexit is still an ongoing saga. That hasn't been put to bed. So it's still, we hopefully get some sort of answer by the end of the month, but there's nothing sure. And then you're looking at the other side as far as UK GDP growth, been decimated over the last matter of months, but hopefully we're going to see a turnaround, though the numbers that seem to be turning around more than anything are the COVID numbers in UK, ratcheting back up. So it could be a very, very tough Christmas period for retail sales and everything else, and just hope to God that we don't see those numbers re-emerge.
All right, well, let's look forward. We look at the stock market, we're talking a bit about here, commodities, it's certainly in correlation to FX.
Yeah, when you're looking at that Aussie US dollar and gold there, still underneath the S&P 500, but it's been the champion. It's really done extraordinarily over the last matter of months, and we've looked at that US Canadian dollar really a little bit in the doldrums compared to the Aussie, and the New Zealand dollar's performed fairly well, but it's been flatlined really since the start of June. So whilst the Aussie has continued to climb, nothing really has beaten the S&P 500.
So we're really talking here about risk sentiment, aren't we? I mean, if you look across Canada, China, New Zealand, we're talking risk.
Yeah, absolutely, of course. The other side, of course, is that US dollar continues to be sold off. Equities and that stimulus that we made reference to before, huge stimulus, building on those equity market rallies, and maybe we're seeing a little bit of a break from those extraordinary, I think, highs that we achieved earlier in the month.
Well, just looking at this chart, I mean, we're seeing effectively a downturn, which correlates, if you think about the headlines that we've all seen over the last, say, 5, 6, 7 trading days.
Yes.
Big sell-offs. You know, all the big names that we saw ratcheting right through, the tech guys, the NASDAQ shot the lights out. Well, actually, hang on a minute, some of those guys are 40% off.
If you strip out the big ones, as far as, the Amazons and the Facebooks, the Googles, Alphabet, of course, then really there's a lot of companies in that S&P 500 that performed very, very poorly, and similar in the NASDAQ, you know. So you've got the huge behemoths that have really taken all of the joy.
Perhaps they've already taken the money off the table.
Well, traders, they look for opportunity. The retail sector's been very much engaged in this last rally over the last, say, 5 to 6 months. So will it continue? Let's just wait and see. It could be a little bit of a break over the next couple of weeks leading into that election. The uncertainty still, as we know, 50 days out.
Are people saving money or are they spending the money?
Well, when you're looking at that chart, shot the lights out. Going back to the start of the century, and it was around that 5 handle, up and down from there, and then we saw a spike in 08, 09, leading into the GFC, and then again in 13, but nothing like what we saw over the April period of this year. It's certainly come off from those sort of numbers, but fear drove into the market and people started to save like there was no tomorrow. These times have been a windfall for some. Some have done extremely well, and others have been, casualties of this crash. So it just depends how long it takes to work through, what the investor sentiment. I think a lot of those dollars would have gone from the market as far as low interest rates, and probably gone in the sense of bank deposits into the actual market itself, stock market, because that's what it needed, and it needed those huge reserves as far as firepower feeding in every day, and they took those stocks to lofty heights.
All right, so next chart here we cover US bankruptcy filings. So they've slowed down a little bit in Q2 after peaking in Q1.
Yeah, we aren't back to those 2018 numbers, but it seems to be very much downward, and those numbers will really start to come into more of a realisation leading into the fall. We've been through the summer period in the States. Be interesting what impact it also has as far as the fire damage, the wildfires in America. I mean, these are just catastrophic. Loss of life, certainly, just tragedy. And also the economic cost. How do they, rebuilding and what's been lost. Towns decimated, homes decimated. So these, I wouldn't be surprised to see, considerably lower numbers over the next matter of this quarter, the next quarter, and then possibly out to March.
Well, let's talk about the dollar. If we look at this chart, who's this good for?
Well, it's good for America in the sense where, from an export side, and you're looking at a continual drop from really that March. If you put your mind back to March, we had a 103 handle, close to it. Then it's just been really a dramatic fall since then, about 10 or 11%. Now that's the US dollar index. It's weighted at about 60%. I made reference to that earlier in euro. So Trump, I'm pretty sure, he constantly says he wants a cheaper dollar, and the Fed does as well, with interest rates the way they are and the firepower that they've thrown at stimulus. So there's every chance you could see a 91, 92 sort of handle. You might even see as low as 90. Some analysts are saying high 80s come the election. So really there's a lot of, I think, bearish sentiment, though some people are saying if Biden gets in, you could see a bit of a bounce. It's just, there's so many different components to it at the moment. So market sentiment, where is Trump at the moment? Biden's in front as far as numbers. So this all creates, I think, a sense of uneasiness from a trader, but it's a very hot market to trade.
All right, Pete, so wrap up the week ahead for me.
BOJ, what's happening with the Fed, UK and the ongoing Brexit saga, COVID numbers climbing across that European and certainly the UK and America. So I think it creates, again, uncertainty leading into this particular week. Where are we at the commodity side? Is still very fractured. Oil under $40, gold at $19.50, no clear breakouts. It's a time just to possibly sit on your seat and sit on your hat for a couple of days, just take a deep breath and see where opportunity takes us. You don't necessarily have to trade every day.
Peter McGuire, thanks for talking to us.
Thank you, Will.